So today we're going to have a little bit of a news catch up with what's going on in the US, because the US markets are looking good. We are looking like we are once again going to break all-time highs, and we're very close to doing it. But today's not a focus on the all-time highs as such. It's as what has been the best investing opportunity for the last 3 years. What if I told you this year, only a month ago, we had the best investing opportunity for the last 3 years, which is actually fact. If you look, we had a stock market crash. The last time we had a stock market crash was 3 years ago. So this is the bet we just had 1 or 2 months ago, the best investing opportunity that we've had for 3 years' time. And what if I told you people didn't take advantage of it? Now, there's going to be a lot of people that don't admit to it, because people don't like to say things when it goes wrong. But there was a lot of people that maybe panicked a little bit. A lot of people, because there was a lot of fear and FUD out there a couple of months ago. And because there was all that fear and all that FUD, it's very hard to come in these times and go, yeah, I'm buying the stocks. Not many people want to come out and say that you're buying the stocks. But if you did, you're making a lot of money. And hopefully you guys are making money. But there's a few people during that time frame that wouldn't have made money during that time frame. They wouldn't have been buying any stocks. They would have missed out on one of the best buying opportunities for the last 3 years, because they were listening to the fear and FUD. And if you miss that, it's cost you a bit of money. It's cost you a bit of money. Those are the best times to be buying stocks, and a lot of people wouldn't have bought it. Now, those people aren't going to admit to it, but those are a few people. And today, I wanted to kind of go on about a few things that happened in the market, and also this dip that we did have in the stock market, crash we did just come out of. But a lot of people have missed that opportunity. And I hope that a lot of you guys were listening to what I was saying. And if you're not listening to what I was saying, and you maybe made a few mistakes, you let the fear and FUD get to you, you need to surround yourself with better investors. You got to surround yourself with investors that look at the long term. Because if you were listening to me a few months ago, before we had the stock market crash, and then you were listening to me when we had the stock market crash, you would have listened. I would have said, like, this could be the outcome. There was loads of people saying this could be the outcome. I bet hardly anyone got the right outcome, though, where this dip happened and then we had the speed recovery and all this inflation data that's coming out at the moment. I bet hardly anyone got it right. That's why you can't predict what happens in the short term. But if you listen to what I was saying about the long term, and if you're a long-term investor like me, this is the part that you really listen to. And what I said to you guys during this dip here is that you want to be buying great companies that will be successful in 3, 4, 5 years' time. Because this dip that you have, you won't even remember this dip. And you'll come back and go, oh, do you remember the stock market crash and the tariff situation? And we've already kind of fully recovered out of that situation now. And it's already kind of like a thing from the past. If I was to say to you right now, we had a stock market crash this year, a lot of people would go, did we? Oh yeah, we did. Because it's so gone, so quick. We rebounded so quickly. And I thought, it would maybe take a little bit longer than what it has done to recover. It's recovered very quickly. But this is what I'm saying. Nobody's going to remember this dip in 2-3 years' time. I mean, if you're sitting on the gains, you will remember it a little bit. But no one's really going to remember this dip. And if you missed the best buying opportunity for the last 3 years, it's cost you a bit of money, hasn't it? There's a lot of YouTubers out there, and YouTubers that necessarily don't put the best information out there, and I try my best to call them out. But other YouTubers out here that were promoting all this kind of fear and all this noise, rather than actually giving you what you should be doing, helping you make the right decisions, trying to help you, make this money, and all this kind of US ports are shutting down, the US economy is imploding, GDP crash, the tariff crash, recession. If you're actually listening to someone that's actually trying to help you make money, hopefully you've kind of made money from this time frame, and as the stock market approaches nearly all-time highs, best buying opportunity for the last 3 years, guys. I hope you made money on it. Now today, stock market's having a good day. The S&P is, it's actually just had a little bit of a pullback, but it's still very much in the last few days, nearly breaking all-time highs. Inflation data. US inflation data came out, and it ticked up by 0.1%, which isn't too bad at all. But what we were seeing, and if we go back to here, is that a few months ago, I remember looking at so much fear out there, so much FUD out there, saying, oh, this tariff situation, inflation's going to go sky high, and we're still sitting at 2.4%, which is relatively, it's okay. It's all good, really, to be fair. Now, when you compare it to the United Kingdom, the United Kingdom is at 3.5%, and even Germany is at 2.1%. The US is quite close to Germany's inflation. Now, the crazy thing is that when we look at the stock market, what could happen in the long term, what could happen in the short term, is that For my opinion, the stock market's pretty okay value right now. But what's the next catalyst for the stock market to go up? And in my opinion, maybe the catalyst that could get the stock market up is interest rate cuts. And previously, we've had all these people that have been coming out and saying, "Oh, inflation's going to go sky high." Even the Fed, one of the highest paid jobs in the world, one of the most important jobs in the world when it comes to the US, setting out the interest rates. Still going, well, we don't know what's going to happen to the China trade war, so inflation could go sky high. Now, if any of you guys have listened to me, guy in the office once again, how does a guy in an office spot all these things before these guys that are paid thousands, hundreds of thousands, in some cases millions? How do they get these things so wrong? I just don't understand. I always say this to you guys, I never understand how me, someone in an office, can point to the situation and spot this before all these guys that are paid hundreds of thousands. But it's the job. It's their job. It's not even my job. I got a full-time job here. And I only come on in the evenings, been at work all day. I'm knackered. I stink. It's been really warm. That was probably a bit too much detail. But how does someone in an office spot this than the people that paid hundreds of $1,000s, millions of dollars, and they can't even see they're making these mistakes? They were saying that these inflation rates are going to go sky high, and I was going, no, they're not. And then we got the inflation rate today, and it's at 2.4%. And this is still way lower than the United Kingdom, and not too far away from Germany. Now, what if I told you the inflation rate went from 3% and it's fallen 20%? If it's fallen 20% since January, how many cuts do you think we had? And also imagine that when we came in January, interest rates were at 4.5% and we're now at 2.4%. What do you think interest rates, how much do you think they would have been cut by? Imagine if I told you we've had 0 cuts. Imagine if I told you that the interest rates were still at 4.5%. Imagine if I told you that the interest rates are nearly double inflation. Absolutely insane. Absolutely bonkers how that's going on there. And then you're looking at United Kingdom. Imagine if I told you the United Kingdom came in at 3% in January 2025, and now inflation's up at 3.5%. And if I told you, how many times do you think they've cut their interest rates then? And if I came in and said, oh, they've actually cut it twice, you're like, hold on. So how's the US not cut, but yet the inflation's a lot better, and then the UK is cutting and inflation's going up? And then you look at Germany, someone similar, someone that's similar to like the UK hasn't got inflation under control. Germany's got it, under control a fair bit. United States has got it under control a fair bit, and that's with the whole tariff situation going on as well, by the way. Imagine if it wasn't for the tariff situation. Now, that's why I always say is, look at oil. Oil's your key indicator for inflation. That's why I always knew inflation wasn't going to be jumping up, because oil hasn't jumped up. But we're getting a little bit more into detail there. But imagine how many times Germany cut. Probably a good indication of where the US should be right now. Well, they were already at 3.1%, by the way. So they came into the year way below what the US were at. Because remember, when we talk about the US came into the year at 4.5%. But Germany have then gone and cut once, 2 times, 3 times, 4 times. 4 times. And they came in at 3%. Ridiculous. And today, I look at the stock market and I'm thinking, well, this is where the stock market's at, but I'm looking at these inflation data, which is really good. I'm looking at these interest rates, and these interest rates have been kept super high because they said inflation was going to remain high, and it hasn't. It's stayed stagnant. And yet they still haven't cut. And this all now falls onto Jerome Powell. Because Jerome Powell, once again, so slow. He was so slow previously because when we were in 2020, 2021, when inflation started going sky high, he was so slow to put the interest rates up. And then we've had the exact same thing where he's been so slow to bring the interest rates down. And so we're in a situation now where Jerome Powell's in a situation where, first of all, I think a few people, I don't always agree with what Trump says, but I think on this one he's absolutely bang on. He's so slow. He is out of his depth. He's out of his depth. It's another big mistake. He should have been cutting. Right now the US realistically probably should be somewhere around a 3% interest rate, and currently they're sitting around a 4.5%. So it's a massive cut off from over half of where they should be right now. And this is what I said to you guys. When I say about someone being in the office and being able to see something happening a lot quicker than these guys that are paid absolute, tons of money and they get it all wrong. How were they not able to see this? I was saying to you guys, and Jerome Powell coming out and saying, "Oh, I can't cut interest rates because of the inflation risk." You deal with that when you get to it. We might not even get inflationary environment at the moment. When you look at oil and true inflation, they're not going up. So you deal with the risk that you have on hand. And he wasn't dealing with it. And meanwhile, your number one priority is the economy. And when you look at the US economy, even before you go for the whole tariff situation, even before you go under Trump, even in Biden's time frame, what's the US economy been doing? It's been contracting. You look at Q3 in 2023 was 4.4%. If you look at Q3 in 2024, it's 3.1%. That's a major decline, nearly half the slowdown in GDP. Look at Q4 in 2023, before Trump even came in, 3.2%, down to 2.4%. You look at the start of 2024, Q1, 1.6%, and then we were at negative 0.2%. So the last few quarters, year over year, the growth has been slowing and slowing and slowing. And the Fed have spent so much time panicking about this tariff situation, and now they've looked and gone, oh, actually there's no impact from tariffs. That was quite obvious that was going to happen. But now they've not brought the interest rates down quick enough. The US economy is slowing. So the Fed's in this situation now where, they've ballsed up again. They've made another mistake. So, there's going to be pressure on Jerome Powell. He needs sacking because to make two big errors like that is ridiculous. He needs to go. He needs to be sacked. But now, they need to be cutting. And not even, the cuts they're going to be doing, they don't even need to be like, 25 basis point cuts. We're talking 50 basis point cuts here. Maybe even 75 basis point cuts. The Fed needs to be cutting now. And they need to be doing big cuts. So when I look at the stock market right now, and like I said, this is short term, and I always say to you guys, like the main thing you do as long-term investors, you buy, great stocks for long term, and you make money, especially when they get cheap, in the stock market crash. But when I look at the stock market now, I personally think the stock market's overvalued, but, when the market's looking or fair value. But when is the market going to have another leg up in the short term? I don't know, maybe. That's why I always hold stocks for long term, because I don't know what the stock market's going to do in long term. If the stocks go up, I hold my stocks, I make money, I'm a winner. If stocks go down in the short term, I buy them, and then they'll go up, and then I'll make money in the short term. So I always position myself where I make money on both sides. But if I put my heads on, like, could the stock market go down from here? Yeah, sure. You never know. Some trade war situation might come out once again. But when I look at the short term, could the stock market go high from here? Potentially. I don't know. I don't know what's going to happen in the short term. But what could be a catalyst is when you look at these interest rates now, well, what happens if all these interest rate cuts start coming out? Maybe the stock market starts rolling up from that point of view. And then obviously then we have the trade war between the US and China is done. You never know with Trump with some of these headlines that comes out, but that could be another leg up. Imagine if Trump kind of comes out with all these kind of big partnerships or trade deals that he's got with the other countries. That could end up with the stock market surging up. But ultimately, all these things kind of come down to the one thing that I opened up the video with. In the short term, it don't really matter. The long term, if you're a long-term investor like me, all you do is you buy great companies for long term and you make money on them. And especially when stocks go and have a big dip, those are your best times to buy. Even when there's all the fear and the FUD out there, you go and buy them. And this situation that we've had at the moment with this whole kind of trade deal stuff, this wasn't even a bad situation for me to go through. If any of you guys went through like the coronavirus dip, now that's a situation. That's the first time I started buying stocks, and I was in a situation where I was like, okay, I normally buy stocks when they're cheap and they pull back, and they were pulling back like, a lot of stocks pulled back 30, 40, 50% during that time frame. But it's the first time I've been buying stocks and went, we've never been through a pandemic like this before. It could be really bad. This could be a bad situation, but I started buying through those dips and obviously made good money from it. So this situation here, this was a dip where I went, okay, you're giving me the best buying opportunity for the last 3 years, and it's just this situation here where with a push of a button, everything can be fixed. A tweet, an X post, this can all be fixed. I'm buying those opportunities. So hopefully you bought those opportunities as well. Next one, just a quick one, new holdings. Good day today, stocks up around about 5%, even though in the last, well, it depends what kind of point of view. It's been very choppy, but realistically, it's been a bit of a stagnant share price the last couple of months. Don't know if you noticed, but there's been a lot of analyst upgrades coming out, and the analyst upgrades have really been hiking up that profit and revenue growth. So yeah, I mean, if they do these numbers that analysts are expecting, they look absolutely amazing. So yeah, I'll be a really happy shareholder if they start doing these numbers. I mean, 5 billion of profit forecast for 2027 on a 57 billion market cap company, growing nearly 30% a year. I tell you what, I'm liking that one. I think it's what's new holdings right now? Is it like 19 times forward earnings? Oh well, I guess it's jumped up a little bit today. To be fair, 21 forward times earnings. Tell you what, guys, interesting. DraftKings, after its slump down last week, the stock has started rolling up, to be fair, up 9.5% in the last 5 days. News coming out between these guys, Flutter and DraftKings. Flutter plans a 50-cent transaction fee impacting FanDuel customers in Illinois due to the new tax hike. So we covered this previously, don't know if you saw, but really last minute, Illinois took another tax hike on the sports betting companies in their state. Now, this is the second one in a year that they've hiked up the tax rate hikes. First one came out of nowhere. Second one definitely came out of nowhere. And to keep the profitability up in the state, Flutter have gone, okay, every time you do a bet now, we're going to, have to charge you a bit more. You got to pay our tax for us. And I look at that and I think, you've got to do what you got to do to make profit in the state. But I look at Flutter and go, hold on. When DraftKings tried doing the exact same thing on the first tax hike, you said, oh, we're not doing that, which was a big mistake. Big mistake, and now you decided to do it. Now it's going to be interesting what DraftKings is going to do. They're going to be the bigger man and go, yeah, okay, that is the right decision, so we'll join you, and they use that duopoly to kind of, start combating this Illinois tax hike so they don't do any more tax hikes. Probably the right thing. Or do they kind of go, hold on, you screwed us over last time, so we're not backing you on this one? I think they probably follow Flutter here, but a little bit annoying from Flutter. I can't really blame DraftKings for this because they did try this, and this is what I always say about DraftKings is that I really like the stock, but there's just been so many things out of their control that have kind of gone wrong in the last couple of months. And Flutter once again, these guys are like impacting DraftKings because what a silly mistake. Like, why did they not follow DraftKings last time and go, yep, we'll follow you through on that new charge that we're going to do because of the tax hike? Because if they used a duopoly to the strength when it last happened and they both did it on the last tax hike by Illinois, we probably wouldn't have had this one. But because they messed about and went, oh, we're not doing that, we're for the customers, and now they are starting to implement it. I don't understand why they didn't do it last time, and we probably wouldn't have had this one. But what I will say is that this is kind of, when it comes to Illinois, it does annoy me with a state like this because these sort of things, you're just going to push more to the the black market, and then you're not going to make any money on it because FanDuel and Flutter won't be able to. Sorry, FanDuel and Flutter and or FanDuel and DraftKings, the odds they'll be able to offer aren't as good. So then you don't make as much because everyone goes to the legal market. You should be promoting the legal market, and then you take more away from that illegal market, and you make more on taxes. And if anything, I don't understand, with these tax hikes. I just don't understand why they don't allow iGaming altogether. But yeah, it is what it is. Bit of a frustrating one, but yeah. Hopefully, we'll probably hear something from DraftKings in the next few days if they're going to do it or not. I think they will do it. But yeah, overall, that's everything, guys. So yeah, I just wanted to cover the stock market in general. The best buying opportunity that we've had in 3 years. Hopefully, you took advantage of it. Some things that might happen in the short term, but also a reminder that anything can happen in the short term. All you need to do is position yourself for the longer term, and you'll make money if you buy in the right companies. A little bit of a look into new holdings, a little bit of a look into DraftKings, and that is everything. I hope you enjoyed the little video there, and yeah, I'll probably see you tomorrow. Thanks for watching, guys. See you in a bit.